Buying a house cash. Who wouldn't love to be a cash buyer? We can show you how today. Even if you don't have cash in the bank, you can be a cash buyer through New American Funding's NAFCash program, and today we're going to teach you how. Your home is often your largest investment. Trust the professionals at Fleur de Lis Law and Title for reliable, secure closings. With 10 offices across South Louisiana, Fleur de Lis is your trusted partner to ensure the title to your home and the money you invest are secure. The experienced attorneys and staff at Fleur de Lis can also take care of your real estate planning and succession needs as well. Fleur de Lis Law and Title, Louisiana's leader in reliable, secure closings. And let me tell you, we do the vast majority of our closings with Fleur de Lis. We have had great service. The attorneys there are just fantastic. So we love doing business with them. We highly recommend them. This podcast is sponsored by New American Funding, the family team where family and finance meet. With years of experience helping buyers achieve their home ownership dreams, they're passionate about guiding you every step of the way. Whether you're a first-time home buyer ready to refinance or adding to your real estate portfolio, the family team is here to help you feel confident and cared for through the process. And let me tell you, we've done business with them for many years, and it's absolutely true. They give a personal touch, and we love working with them. Hi, everybody. Welcome again to the Will Frederick Podcast, where we talk about real estate, wealth building, money, and life. We're excited that you're joining us today, and I'm also really excited about my longtime friend and one of my favorite lenders, Kevin Levy. He is with New American Funding, and tell us a little bit, Kevin, about yourself, your journey into the real estate and the lending world and New American Funding.
Yeah, I got into mortgage lending 10 years ago. It's been a fun journey. We've been able to help a lot of people buy houses. We've been able to help a lot of people buy investment properties. I've learned a lot along the way. The mortgage industry has changed a lot in 10 years, and we're excited to be a part of it now with New American Funding, which is a national group, which we'll talk about. They have a lot of special programs, and it's a little bit different mortgage company than what's been out there.
Yeah, we're really excited to talk about one program in particular. It's New American Funding. Their acronym is NAF, so NAFCash Program. And so we'll get into that in a minute. But another thing I'd like to highlight, so Kevin talked about having been in the lending business for 10 years. That is incredibly valuable. The whole time he's been in it, I've been using him as one of our primary lenders, and he's fantastic. He does a really good job, and probably a lot of you know him and may have met him before or may not have met him, and this is the first time you're seeing him, so he may have done your loan. So he's done several for us, me personally, and then he's also done, I don't know, maybe over 100. Yeah, I don't know if it's been that many.
With you, absolutely.
Yeah, I would think it would be, but
we've done thousands,
maybe?
hundreds.
Yeah.
No, and 10 years ago, the lending was limited. The mortgage programs were tighter, more restrictive, and now they're coming out with all kind of new programs to help people buy houses, whether it's down payment assistance, bond programs, tons of new investor opportunities. So we're excited to offer these. And now with New American Funding, we've hit the treasure trove of mortgage products. I mean, they've got more things that I didn't even know were possible. So today we're going to talk about NAFCash, and in the future we can talk about some of the other programs that we have. But NAFCash is really one of the main reasons that we came to New American Funding.
Yeah,
it's a great product, and I'm excited to share that.
Yeah, and I'll have some specific questions about that. I do want to highlight one other thing. So Kevin talked about a treasure trove of products. Now, if you don't know really what that means, what Kevin does, and this is one of the wonderful things about using him, what he does is if you give him all of your information, he is the expert. He's going to find the box that your set of information fits in. He's going to kind of like look around and see what options you have and give you those options to say, hey, here's what you might want to consider given your specific set of circumstances. Each person's a fingerprint, right? Everybody's got their own different little...
Everyone's got a unique situation, and it's about where you are today, and it's about where you're going to be in the future, because this might be your forever home. This might be your first home. And you might be retiring out of this home and going to something smaller. So I like to look at what you need today and then what you need in the future and put a plan together. Yeah, there's so many options and what to do with your money as far as down payment and what you need for a monthly payment and how long you plan to be in this house. All those factors kind of go into which product we're going to use and
Yeah.
what you want to take away.
I remember, like I actually used to do mortgages like many, many, many years ago for like 5 minutes, and I was terrible at it. And so, however, one of the things I learned was it was like a big bad word to have like an adjustable rate mortgage. This was back in 2008, and it really burned a lot of people. But then I remember a lender told me a few years later, like, hey, you ought to consider an adjustable rate mortgage. And I said, what? That's bad. They said, well, it depends on your goals, because if you're only going to be there for a few years, you're going to get a lower rate for those few fixed years, and it floats up. But if you know that you're not going to be there for very long, this could really make a lot of sense. So to Kevin's point, it's about your specific goal, your long-term strategy, and that's what we're here to do. Y'all know me. I'm always worried about, like, what is your goal? It's not always about price. It's not always about location. There's lots of different goals for people. So the more that we know about your situation, the more we can specifically help you maximize value or whatever that goal is.
Yeah, what I found with New American Funding, the application process and the underwriting process is so much smoother and so much easier. What we do now is get someone pre-approved, actually going to an underwriter before they ever go out and look for a property. So we give a real pre-approval where we have reviewed their income, their assets, and all their documentation. So when they go find the right house, all we have to do is add the property, get the title appraisal and homeowner's insurance, and it's a done deal. We're closing loans way faster than we ever did before, and the process is so much smoother for our customers, for us, for you, the realtors, and everyone involved in the transaction. So it's been great.
Yeah, I can't tell you, for a realtor, there's not too many sweeter words than getting a call from your lender saying, hey, we can close early. You ready? So that's one thing that Kevin's done quite frequently. So under-promising and over-delivering. We love it. So I want to talk specifically about the NAFCash program, because this is a really powerful tool. And one of the biggest challenges sometimes we have in the real estate world when we're going to find a buyer, a house, they have a house to sell. So that can be a really tricky thing to coordinate, selling their house, which y'all know. I mean, I do that, with the best of them, and I love to list that house and coordinate that sale. We do it all the time. We do it really well. However, it's tricky, and it's extremely stressful for the borrower, the buyer, and then they're at the same time they're trying to sell. So one of the best things to do is, if you can do it, to buy your house first, then sell your house. But most people can't do that because it needs, you typically need that equity, or you need that debt to income, freeing up. And so what the NAFCash program allows you to do is buy your house that you want with cash and then sell the house that you're in afterwards. And that's a really unique situation. Of all the loans we've done, not very many people can have two house notes at the same time. And this is not two house notes. But let me ask you, Will, how many people in Louisiana buy a home with cash? What percentage do you think that is? It's very rare. I mean, we did 111 sales in 2023 and 85 sales last year. And I am thinking maybe 5 were cash. I mean, so that's like, what, 2-3% maybe?
It's not that much.
Yeah.
Nationally, the average for cash buyers is 10 to 15%, and actually in the South and Louisiana, it's a little higher. It's like 20%.
Okay.
So there's a lot of cash buyers out there. When you have someone that's in a home and wanting to buy a new home, they have to put in a contingent offer.
Yeah.
And a lot of times people are afraid that their house might sell that they're in before they find one, or that we're going to lose the house that they want to buy because they have to put in a contingent offer. So this program really is cool because it takes someone that owns a home and it gets them the opportunity to put in an offer, full cash price, which will save them money, because when you make a cash offer, you're saving 7 to 10%.
Yeah, a lot of times you will.
Then they can move out of the house they're in into their new house, and the realtor gets to set up the house, fix it up, paint it, do what they need to do for repairs, and they have a vacant, empty house to show, which makes it sell a whole lot faster, right?
Oh, it's much easier.
You don't have to gather the kids and the dogs when you have a showing and set up a time and make it convenient. It's an empty house, so it goes quickly. So the process is simple. First, we get you pre-approved for the long-term financing. And this is only for conventional and VA loans. It's only on primary residence, and it's only single-family homes and condos. So it's not for everybody, but it is for people that own a home and want to buy their next home and don't want to have to wait. So what you do is get pre-approved. Then you go out and find the house, make the cash offer.
That's amazing.
Then they move out of their current home at their own pace. They have 7 days after we close on the cash offer, on the cash closing, to get out of the home, put it up for sale. They're living in the new house. When their old house sells, they'll buy the house back from us and go into their permanent financing. It's just that simple.
Well, and let me tell you something. This is a game changer. If you haven't heard of this before, reach out to Kevin. We will get you more information about this. This unlocks a lot of doors for a lot of people. Imagine going in and being a cash buyer. That's a dream for most people. So this will allow you to be that cash buyer, not putting in a contingent offer, not worrying about having to coordinate a moving truck on the day of your sale closing to go to the new house and have a back-to-back closing. That's incredibly stressful. And we've done it a lot for people, but let me tell you something. It is not a fun situation if you're a seller and a buyer that same day. It's doable. People do it all the time, but it's a chore. And so this allows you to save that time, that effort, that stress in your life. Thank you to our sponsor, Real Estate Tax Pro Bob Norton with Norton Accounting Services. Bob's goal is to help his clients become financially free using real estate. And let me tell you from personal experience, he really does. He focuses on real estate investors with clients in 48 states. He's been a resource to myself and many other investors. From a wood-fired pizza truck to a brick-and-mortar pizzeria in Ponchatoula, Nola Mia serves the best wood-fired pizzas, appetizers, wings, salad, and desserts on the North Shore. But Nola Mia is more than a restaurant. It's a community hub where friends, family, and coworkers gather to celebrate special events or just have a night out. And if you come to Nola Mia, you're probably going to see me there at some point because me and my family frequent there a lot. It's one of our favorite places to go.
The convenience factor is huge, allowing you, not to have to worry about the sale, the packing, the closing, the next closing, the moving in, all happening on the same day. It's a really convenient feature for people. And I've done a few of these. I have a new one going in right now, family with 2 small kids, and they just love the idea of not having to do it all on the same day, all at once, the stress. And it's great. So some of the features and some of the way that this program works.
I want to ask you. So, like, this is a little bit of a gotcha phrase, but what's the catch? Like, I'm sure there's a cost there, right?
There is a cost.
Like, what is the cost, and how is that? What's the value there?
So when you put in your cash offer and it's accepted, we can close quickly. All we need is title and a home inspection. The appraisal's done with an AVM, an automated valuation.
Okay. On the
new house.
New house. Okay.
So the customer, the client, will have 30% equity in their current home, whether it's equity in the home or a combination of equity and cash or investments.
So that's a requirement to have a 30% equity or equivalent.
Correct. The earnest money is 5% for conventional and 1.5% for VA. And we purchase the home cash. We pay for the closing. We pay for the insurance. We rent it back to them for the time that it takes for their house to sell.
So NAF technically owns the house
NAF
at this point.
Owns the house.
All right.
We rent it back to them for the time it takes them to own the house. For the first 90 days, the rent's deferred.
Wow.
And it's very reasonable. Up to $300,000 is $1,800 a month.
Okay.
And every $100,000 over that, it goes up $500.
Okay.
So a $500,000 purchase is $2,800 a month.
Wow.
So for the first 90 days, you don't pay anything. And if you sell your home in 14 days, you pay 14 days worth of rent. We're not a renter. We're not trying to make money on this, but we do have to charge something for the time and effort to put all this together.
When you say it's deferred, it does accrue. You do pay it, but you just don't have to pay it out of pocket right then and there.
Exactly.
It just comes off
you pay it at
when
the
you're
closing.
settling up. Okay.
Yes.
Gotcha. And it's a per diem pro rata. So
per diem, 33 days.
That's great.
You pay 33 days. So at the buyback, you pay the rent. And then you own the home. You go into your permanent financing, which you've already been approved for, and it's a done deal.
It's really a genius program if you think about it. You wonder why lenders didn't think about this earlier, you know?
Well, not everybody can do this. So New American Funding is privately owned.
Okay.
5 years ago, they went to Washington. They had a $100 million investment in this program. They went to HUD. They got approval to start this program, and it's been a game changer ever since.
So it's been around for 5 years.
Yes.
And I've been hearing about it over the last year or two, and I kind of thought it was a little gimmicky. And then when Kevin...
It sounds too good to be true until you understand it and use it, and then you're offering it to everybody. Because it's great for a listing agent to offer to...
Correct.
The sellers. It's great for a listing agent to offer to the buyers coming in with a contingent offer. A lot of people don't know about it. So I'm excited to share that and kind of help people use this program to get where they want to be.
And it's helpful for me to continually hear about it, because just the other day you and I were talking about a client, and I was telling you, we're in a, and you said, that person would be perfect for the NAFCash program. I said, oh yeah, you're right. That's true.
Absolutely. It fits a lot of people's boxes, and it's very unique. And no one else has it.
What are some of the most common questions you get about that program specifically? I mean, some of them you've already addressed, I'm sure, and I asked a couple, but is there anything else that we're leaving out of it?
No, it's very simple, and if you think that this might be a good fit for you, I can look at it and put it into one of the options that we have. Now, one of the questions is if our house sells before we close, do we have to use the program? No, you would just use your regular conventional financing. There's really no holes in it. There's really no issues with it.
Well, that is awesome. I'm really excited because this is really, like I said, it's a very big game changer for a lot of folks, and I think the value is there. And I did hear about it before, but I thought it was a little gimmicky. However, when Kevin came to me with it, I said, okay, if Kevin's behind it, I know it's legitimate, because I have a relationship with him. We've been dealing well together for so many years. So that made me really kind of sit down and pay attention and say, all right, we need to start using this and helping our clients with it.
And it's not exclusive. So to qualify for the conventional or VA, minimum credit score 620, minimum down payment 5%. So you don't have to put all of the 20% or 30% into the purchase of the new home. You can do your regular conventional mortgage however it best fits you and suits your needs.
Yeah. Well, that's an exciting program, but I don't want to pigeonhole Kevin. He's the NAFCash guy, but there's so much more. He talked about the treasure trove of options that you have. I'm going to ask him a few more general questions about just financing in general. He and I were talking before the podcast started, and we were talking about investors. That's a big source of their business right now, and then also first-time home buyers. So specifically about first-time home buyers, what's one thing that you wish people would know before they even talk to you? Like, because I'm sure you tell them these things, but what's a thing for a first-time home buyer specifically? What advice can you give to somebody?
A lot of people think that you need great credit and a huge down payment to buy a house, and that's just not the case anymore. We have several products that are bond programs, down payment assistance programs, pathway programs to help people get into homes with lower credit scores, with lower down payments, sometimes with no down payments, and even with down payment assistance that helps pay for closing costs. So anybody can buy a home. And if they can't, I will put them on a path to fix what needs to be fixed so they can buy a home. And usually it's an easy fix in just a couple of months.
Well, and one thing I was going to say is that's so true, and I forget that people don't realize that. I've been eating, sleeping, breathing real estate for 16, 20 years now, so I've been thinking about this, and I'm very familiar with one of the top programs we do is a rural development program, RD they call it. It's 100% financing. Now there's income limits, but most people on the North Shore, St. Tammany and Tangipahoa do qualify for it. And correct me if I'm wrong, but every property in those two parishes and the surrounding parishes really qualifies for it.
Everywhere in Louisiana is USDA eligible except for Orleans Parish and parts of Baton Rouge.
Okay.
The rest of the whole state can use that program.
So there you have it. Like most people, when I go to these conferences, big Keller Williams conferences and real estate conferences, people are talking about down payments, and that's a big challenge for people. We really don't have that challenge a lot of times because rural development is literally it's 100% financing. Sometimes we can negotiate the seller to pay all the closing costs. You can walk in without $1 out of pocket. That's pretty amazing. So if you're renting right now or you've thought about buying a home, come talk to us. We may be able to put you in something for a lot less than you think out of pocket.
Absolutely. The other thing that first-time home buyers need to know is you need to work on your credit. Minimum credit score, 500. That's pretty low.
That is pretty low.
And we can work with that on certain programs. So 580 is another big number, and then 620 is another big number. But people think they need a 700 plus credit score. It does open up more options, and it does get you better rates, but it's not necessary, and we can get you into a home wherever you are.
And at the rate home values have gone up over the last few years, and we anticipate them continuing to go up. Sometimes if you're waiting for like a little bit better rate or a little bit better, your credit score could qualify you for a little bit better rate, that payment difference is what you're like trying to pay attention to. And some people need to do that. However, if you bought a home today versus waiting 2 years, and let's just say it goes up $15,000 in those 2 years, you might have waited, you might save $50 or $100 a month on a payment, but think about how much of the value and appreciation you gave up by delaying that.
And if we can make the payment work today, exactly, your home appreciates, your payment stays the same. Mm-hmm. The opposite isn't true in a rental situation where the property may not be as well maintained and your rent keeps increasing year after year.
Yeah, and you can add value to your home. You could go do a project, put granite countertops, paint a room, replace flooring. That improves the value of the house, and every dollar you put into it, it's usually going to pay off in spades.
Absolutely. Another thing that has changed a lot recently is the investment property programs.
Yeah, and you've been telling me a lot about that because y'all know me. I'm an investor.
Yeah, so in the old days, it used to be conventional financing to buy investment property. Mm-hmm. And you can only use, so much of this income, and all of your debts count against you, and all your properties count against you with taxes and insurance. Mm-hmm. Well, they have new programs now where all we take into consideration is your credit score, your down payment, and that subject property's ability to produce income to cover the mortgage.
Yeah. A debt service coverage ratio, right?
That's right, DSCR.
DSCR.
And that is what everyone is using now to buy investment properties. It's great for first-time investors. It's great for people that have several properties and want to add to their portfolio. Mm-hmm. It's just an easy program because the qualifications are minimal.
Yeah.
660 minimum credit score, usually 20% plus down for down payment. Mm-hmm. But that's it. As long as the subject property's rental income is greater than the mortgage payment, it's a go.
Yeah, and I've done several of these. This is also a game changer for an investor because years ago I hit this limit of I had so many properties and they were looking at my what they call global debt to income ratio, and it was just looking kind of tight. I'm like, I'm fine with it, but the bank wasn't fine with it, and that's who I had to get the money from. So it didn't work. This DSCR loan has really helped a lot. So.
And another thing we're doing a lot now, which banks have stopped doing, is home equity lines of credit and home equity loans. Mm-hmm. Everyone's home is appreciated. They've got all this equity built up in their house, and they've run up some credit card bills or other things that they need to pay off. And so we're able to do home equity loans, which are also quick and easy. Mm-hmm. And it helps a lot of people.
Yeah, and if y'all haven't heard my tirade on home equity loans, everybody should have a home equity loan, I think. And so I've advised this to so many people. You get a home equity loan. It's a relatively low interest rate. It's usually an interest-only payment. You can pay off higher debts with it if you have other debts. It's also a great tool for investing. If you see a property, then let's just say you have $40,000 of a home equity line of credit. Let's just say you see a really great property. You could put a cash offer on it if it's a small price tag on it, or you could put a down payment on that property using your home equity line of credit. It enables you to unlock the equity in your home.
Yeah, it's a great thing to have, whether you need it today or you might need it in the future.
Yeah.
Set it up now.
You never know when you might need it, so it's good to have it there. So let me ask you this. What are some bigger trends you're seeing in the mortgage industry? You talk about new programs. I know that, just historically speaking, when the 05, 6, and 7, 8, the bubble popped, there was a lot of tightening down on programs. The lenders got really, really tight with the money, and they said, man, we can't be that adventurous with or creative with these programs for people. And that caused a problem because, all of a sudden you had all these properties and nobody could buy them because they were used to getting a lot freer money, but all of a sudden it tightened down. We're starting to see the pendulum swing back. Is that what I'm hearing?
Absolutely. There are so many new programs, whether they're creative like NAFCash or from the federal government, the down payment assistance and bond programs. It's the American dream to own a house. And everyone is pitching in and loosening the regulations and making it easier. Not the way it used to be before 2008, but making it easier than it was 10 years ago to buy a house. And all of these programs, we literally have 2,500 different down payment assistance programs across the country to choose from, and they're adding to them every day. Louisiana has several specific bond programs, and they're building houses now at a rate that still can't keep up with demand.
Yeah, and that's a big factor. And I want to hit on two things you just said that I think are really important. We're still in a supply deficit. A supply deficit means we have more buyers than we have houses to sell to them, and that's a big problem. We're trying to fix that nationally. That's a problem in the South. That's definitely a problem. So we're still trying to catch up to that. So that's affecting prices, right? The supply and demand curve. You have low supply, high demand, that pushes up the price. So that's a big factor I want to point out. The other thing that Kevin said that I think is really an important thing for y'all to hear is that there's 2,500 programs out there. If you ask me how many programs are out there, I could probably name 6 or 7 or maybe 10 of them. And I've been selling real estate for 16 years. So if he knows about 2,500, I'm talking to him. I'm giving him my information because that's going to save you so much time by going to him and saying, all right, Kevin, here's all my cards. You tell me how best to play them. And that's what I think the gift is of working with an awesome lender like Kevin.
Yeah, we're local. We have a local presence. We work in our communities. We're a part of our communities, but with New American Funding, we're also national. We can lend in all 50 states. We're nationwide. If someone's relocating in or out of the area, we can help set them up with a local lender and realtor here. And also, wherever they're coming from or wherever they're going to, we can assist with that.
So here's a question for you. What can lenders not lenders, investors, or just general borrowers do to improve their creditworthiness or their debt-to-income ratio? Is that something that you have some, like, off the top of your head, like, oh, I see this problem a lot, I'd give this, just do this, it's easy?
Well, there's two things that affect your credit. One is not having enough good credit. A lot of people that are young might have something on there, or they don't have the history, or they don't have enough different trade lines. And the other problem is people that have too much credit and use it and have things that are maxed out. You need to have credit, have history, and use it correctly by keeping your balances, under 30%, let's say. Okay. That boosts your credit score. So if you have a high balance on a credit card, you want to pay that down, and that'll get your scores up.
Yeah, another tip that I've heard for keeping that balance low as a percentage of the total credit is if you've had the credit card for a while and it's close to maxed out or it's like over 50% or over 80%, you can actually contact that credit card company or that lender and say, hey, can you increase my credit limit? Because if, let's just say you've got $10,000 and limit on your card and you owe $8,000, well, that's 80%. That's going to look bad. If you had that credit card for 5 years, 7 years, you call them and say, hey, can I have a $20,000 credit limit? They might say, sure, that's fine. All of a sudden, you go from 80% to less than 50%.
Absolutely.
Like that.
And another thing, if you get in trouble, if you are laid off or if you're having trouble paying the bill, you can work with your credit card company and they will work with you to make a lower payment to keep it active. And another thing you don't want to do is if you have an old credit card that's got a zero balance that you're not using, don't close it.
Yeah, don't
leave it open. The longer you've had credit and the longer your credit history is, the better your score.
Yeah, and there's another cool trick that you can use with those zero balances. If you keep them open, sometimes they'll start sending you like balance transfer fees that have zero APR for a year or something like that. So I used to use those, and a mentor of mine would use those. He'd carry a big balance on a credit card, and every year he would find the next credit card that offered him a zero APR, and he'd just keep on bouncing it around and never pay interest on it. There's a balance transfer fee, but it was like $100 or something like that. It was a really good deal.
Absolutely. There's a lot of creative ways to make it work.
Yeah.
You just make your on-time payments. Don't miss a payment. And if you get in trouble, you can always ask for help.
Is there anything that you'd say that a borrower should do before even coming to talk to you?
So there's a couple of things that we need to buy a house, and there's documents that we need. Most people have these electronically now. It's not as difficult to go find, your old pay stubs or your old W-2s. Mm-hmm. But income documents is something that we rely on heavily. So 30 days pay stubs, last 2 years W-2s, possibly tax returns. Some people come to me and we talk and they haven't filed taxes in a few years. Mm-hmm. So you want to make sure you're current on your information. You want to make sure that you have the documents that we're going to need. And the list is short, and most people have that now. Mm-hmm. So it's not anything that's challenging. But before you go house hunting, you definitely want to talk to a lender and get pre-approved. You want to know what the options are. You want to know what your payments are going to be. So when you go out to look for a house, you're looking in the right price range. Mm-hmm. A lot of people qualify for a lot more purchase power than they want to spend. Somebody might want to spend $2,000 a month, but they qualify for $500,000. So those two things, you want to have that conversation and know where your money fits in with the house you want to buy.
So one of the most important things before a borrower goes out to buy a house, we want to know exactly how much they're pre-qualified for, because we want to be able to sign that paper and make that offer as soon as possible. Because if you don't know how much you're qualified for, then one of the worst things that can happen, and I used to do this a lot in the beginning, we'd go looking at $200,000 houses, and they'd fall in love, and we'd go look at 6 or 7 houses, and they fall in love with one of them, and then I'd say, go talk to a lender, and they only qualify for $175,000. So then all of a sudden, we're looking at $175,000 houses, and guess what? None of them look as good as the $200,000 houses. So the buyer's not going to be happy no matter what we do. So it's very important to set your expectations personally up front by talking to a lender that can give you a realistic picture and look at what your situation is. So I highly recommend that.
Yeah, and it depends on where the house is, because there's more things that go into the mortgage payment than principal and interest, insurance and taxes.
Big time.
Homeowners association fees. And all those things come into play into qualifying for a certain loan amount.
Yeah. Yeah. So if you could talk to your younger self, Kevin, and give him one piece of financial advice, what would you do? Knowing all the things that you know now, I mean, you're an experienced business owner, what would you say?
If we had invested in real estate at a younger age, it would have been a struggle, but now you'd be reaping the benefits. Mm-hmm. Investing in real estate is always going to pay off with the appreciation and home prices, with the consistent payments that you have. Our first house was a $125,000 house. Mm-hmm. It's 7.5% interest rate that we bought, 37 years ago. Mm-hmm. If we had held on to that house, it'd be worth 3 times that amount now, and it'd be paid for 2 or 3 times over. So it's great when people have their first house and they want to move to their next home, but try to maintain their current home as a rental. Mm-hmm. And that's just a great option, and it's a great opportunity, especially young people buying a multi-unit, a 2 or 3 or 4 unit property, and living in one until they save up enough to go buy their house. And then they have an income producing property forever.
Yeah, that's what I tell my kids. House hack, like buy a house with 3 bedrooms and get 2 roommates. That's what I did the first 2 houses I owned. And then the third house I owned was actually a multifamily. Moved into 1 unit and rented out the other 3. I still own that house, by the way, because I'm taking the advice that you would have given yourself. I learned after a while, hey, don't sell anything, just always keep it. And so that's a huge thing. I'm trying to teach my kids that. And I, by the way, I did not pay Kevin to say that. That was his advice, like unsolicited advice.
Well, it's never too late to invest in real estate.
Yeah. Mm-hmm.
and people think that the prices are high now, but they're only going higher. I mean, now
absolutely.
today is the day, and now is the time. So
Yeah. Two of my favorite sayings when it comes to that are the best time to plant a tree was 100 years ago. The second best time is today. I think that's an old Chinese proverb. And then the other one I love to tell people is yesterday's retail is today's bargain, because there's not a investor that I know that doesn't look around and say, man, I remember when I could have bought that for this amount. I should have bought it. And I'm always saying that. So at the time, it feels like a struggle. Like you said, that's very good advice. It's going to feel like a big mountain looking in front of it. You're not climbing the mountain yet. You're like, I can't do this. You can do it. Trust me, you can do it. Start taking that one step at a time, and you're going to look back and be very grateful that you did that. So that's great advice, Kevin. So is there anything else you'd like to share with us today?
No, like you said, now is a great time to buy houses. Interest rates are moving in the right direction, and we anticipate that to continue. All the projections are pointing to lower rates in the next 12 to 24 months. And if now's the time for you to buy a house, get in the house today and refinance the rate tomorrow.
Yeah, and even if the rate doesn't go down, one thing that I've been looking at lately is the rate of inflation. There's so much inflation that's happened, and that doesn't look like it'll stop anytime soon.
No.
The amount of money that's been printed, the amount of, even some of the new administration's policies are inflationary. And I'm not saying for or against it. I'm just saying from an economic standpoint, tariffs are inflationary. Deporting immigrants is inflationary. So there's a lot of things that will be coming down the pipe, or that probably will be coming down the pipe, that are actually inflationary. So if you're worried about prices today, they're going to be higher tomorrow, and that's historically proven. That's not that's earth-shattering news or anything. So I would say commit to that house, lock that debt in, because in the rearview mirror, that debt shrinks faster and faster because you're paying it down with inflated dollars. So it's a huge principle. So thank you, Kevin, for joining us today.
Thank you, Will.
And thank you all my listeners. Yeah, it was really fun. I enjoyed it. And so I really appreciate you coming. And Kevin, by the way, is a sponsor of the podcast. So check him out. Come talk to us. We'd love to help you. Thank you so much for listening today to the Will Frederick Podcast, where we talk about real estate, wealth building, money, and life. See you next time.